Hey folks, there we go. Hey folks, welcome to the Alpha Trading Morning Show with me, your host Yasha. I am looking at the volatility starter indicators here on our volatility starter chart. These are Alpha Trading tools, and these are actually available for free in our Discord, via our Discord. The daily look on Bitcoin is what we're seeing right here, and you can see very well that the volatility on the short length is descending, as is the correlation to it. Generally, you'll see a price rise. That is the tendency of a falling correlation on a falling volatility. Generally speaking, that is what we're seeing right now on the short length. On the medium length, you're seeing a little bit of a slight walk down, sideways walk, a little bit down on the medium length with flat, significant correlation, positive correlation. Also, the short length is significant and positive, but it is sloping down as its volatility. And the long length here is relatively low volatility, also sideways walking, and also significantly positively correlated, going flat. So a flat and possible down day, but with a little bit of pumps, as we see here happening. Not at all out of the cards. These are the probabilities. The tendencies do work out like this very nicely. And you can see it here for yourself. If you look at, let's say, the beginning of the pump a couple weeks ago, the beginning of the year, you can see right here there's a flash on the low length, the medium length, and the long length was in the middle of quite a long flash series. That flash, by the way, ended on the long series right at the beginning of that 3 day significant pump when it broke over the more recent higher bits of action here around the middle of December. So that 3 day, here we go, 1, 2, those 2 days were right after that flash ended. The last signal day on that flash on the longer length was right there at the second day of this significant pump here. The middle length had ended its flash a day before, and the shorter length, which is really handy for front running, especially on lower time frames, started right here around the 4th of January, just as this little pump was initiating, as a slow rise was initiating over the past couple of weeks, and it has flattened out now so far. Yesterday was obviously a day of a lot of indecision, as we saw. There was like a $800 range on yesterday's daily candle, and it ended up quite a flat range. So that $800 range was about 3.75%, like 3.77%, something like that. But then ended up flat and a bit down, about 0.25% down, which indicates obviously a lot of volatility. When you look at the returns, when you look at, here we go, the returns over here. Here's our one of our returns oscillators, the alpha laser returns. And you can see indeed yesterday's returns were quite low because it was a day of a lot of volatility on the short and medium length, and led to flat returns despite the big wicks relatively compared to the size of the candle body, and the big wicks in both directions relatively. So we had a relatively flat day on the returns, and as always, the returns are what determine the price action, not the other way around. And why is that? That's because returns mean revert, not price action, right? Price action does not mean revert. Price action follows the returns. So that's what we use for a lot of our trading. And that whole concept about, using the relevant maths for trading volatility, entropy, probability, and statistics. And on this chart, we see the volatility, some of the volatility tools. Here's the alpha volatility quality indicator, and it's showing you that we had a significant rise from the beginning of the year when it was a very crushed, very, very crushed band of standard deviation bands around the AVQ. And you can see here that as it started to expand at the beginning of January, right around here, it was still crushed. It started to expand around the 7th of January, and the slow MA of it started to rise, and you can see that the AVQ started to rise above and is now above the third band, which is a very probabilistically placed. Well, actually, today it has just dipped beneath it, and that makes sense because, again, you have like a 99.7% chance of or probability of closing within the third band, right, from here to here, from the top side to the bottom side of the third band. That's going to contain about 99.7% of the distribution. So these days here, from pretty much the 12th of January until yesterday, really, were beyond the 99.7% probability, which is obviously a significant outlier, right? When you have such a significant outlier of the returns falling beyond the probability of the distribution, well, it's only natural that eventually it's going to come back and close within it. So now you see we are within the third band, and it is not improbable to see it start to move back down because that is what happens, right? It moves to the extremes. It doesn't always close beyond the third band. That is obviously extreme, and this was building up for quite some time, as you can see here. The last time we closed beyond the third band was quite a while ago, here in June of last year. Since then, price action has been contained, and because the returns have been contained within these three bands, which you can see very clearly, we did not break beyond it from June to January. So that's a good half a year. So this is, you could say, a not so common event that it closes beyond. And again, 99%, 99.7% percentile, that it will not close beyond the third band on either side. So there's a clear example of why that is such a special and lovely event. So now, what does that mean? Well, that means that you have here on the laser returns, you have the returns having descended and significantly, and they are practically flat now after having had a little bit of a expansion here on their standard deviation bands. And we are currently playing out, or yesterday we played out a little bit of a bear div from the ALR. That's after having played out a bull div the day before that on the ALR. And you can see now that the returns are effectively very close to flat, well within the first standard deviation to the upside today so far. Of course, that could change very easily. Anyway, these tools right here are all available. We give free access. This one's freely available. You can download it right from our profile without having to do anything. Just go get the AVQ if you want, stick it on your chart. It does a wonderful myriad of things. You can see the settings here and all kinds of wonderful settings you can play with. If you're watching this on video, pause and look at the settings. You can see all the different things you can do. If you have any questions about this, there's documentation. We have tutorial videos available up on our YouTube channel, and you can, of course, ask us about it in the Discord. We're a very friendly group of traders, and you can join our Discord for free. We don't charge for education or anything like that. We do have a premium set of tools that we make available to subscribers who want to take their trading, obviously, to the next level, that are significantly more advanced than these tools, and you'll see those in a little moment. But I wanted to show you these because these are essentially the fundamental tools for trading, alpha trading methods of trading volatility and probability and statistics. Pardon my cough. I have a little bit of, or not my cough. My voice sounds a bit maybe, I don't know. Anyway, uh, so anyway, the AVQ indicator is actually a highly directional indicator. If you know how to use it correctly and set it correctly, you can use it to catch significant moves to the upside, to the downside. Doesn't really matter, and in any time frame as well. So there's the daily look. So have a look at the weekly, shall we? Look at that. From the highs of November, you would have nailed that high. And if you would have taken that short from the highs of November 2021, when Bitcoin is around 60 something thousand dollars. You would have remained in that short all the way until the pump of mid-March. And then you would have gotten back in that short again. And you would have enjoyed that short all the way down to June. And then you would have gotten back in that short again. And you would have taken advantage of that short all the way down until the pump of October and started to run up a little. And then it ran down again, perfectly on time. And look at that. It started to pump up at the beginning of the year. And here we are, right? It is very directional, highly accurate. It is not designed to get you every single, exact top or bottom, but it is highly, highly accurate for grabbing moves that are in trend or moves that are on a random walk. If you know how to look for those things, we happen to have tools for that. Some of the tools we use are our lovely entropy indicators. Here we are on the 1 minute. Let's go to the 15-minute, just so that we're clear on what we're doing. You can see here our lovely entropy indicators. We have all kinds of wonderful tools. These are all alpha trading tools, by the way. I'll just give you a run through real quick before we get into our entropy indicator. But this tool right here, these three tools, and this tool down here at the bottom, the entropy oscillator, these are all entropy tools that will tell you the trending moves or the random walks if you know how to read them. They'll show you the divs on the entropy oscillator, and divergence does matter. Show you, and we have a returns oscillator here, which is our primary div tool. It is incredibly powerful for divs. And again, the ALR, which you saw on the previous chart. This is the Wolfsbane, which combines the returns oscillator and the Z-score and some other goodies. The variance. The variance is an incredibly powerful tool. What is variance? It is the spread of data around the mean. What is that effectively? That is volatility. You can also see the volatility right here, just as you saw it in the previous chart on the right side of the chart. And here you have the power mean and these little wonderful colors, red and green things that are constantly shifting red and green and have a few outside lines on them. That is the RMLR, which actually shows you information about what is likely to happen in the future. And what do I mean by that? It is likely to show you the reverse mean of log returns in the future. What is the reverse mean of log returns? It is literally what it says. It is the reverse mean of log returns. After all, what are we trading for? When we are trading based on math that are relevant to actual trades, just like the HFT firms, just like the quant shops that build and run these huge algos that move 80% or more of the market trades, they are trading based on things like the mean and the returns which are the log returns, right, of the mean. Excuse me, the log returns of investment, right? And it's the return based off of what is happening vis-a-vis the mean. And what does that mean? That means that they are looking for returns or gains and losses based on trades that are moving to or from or away and closer to the mean, since that is what returns do. Returns zigzag around the mean, and you can see it right here very clearly. Right, if we just expand this chart, you can see, we'll make this one bigger. You can see very clearly, here's the pink and blue. This is the power mean, is effectively the mean. And these are the returns in translated, which, the price action follows the returns. And you can see here that the returns, which here is this, the returns oscillator is this little line that's got the yellow highlight around it, goes back and forth. It zigzags back and forth to the mean, right? And here's the mean, and you can see that the price action follows the returns oscillator back and forth around the mean. And literally the price action will also zigzag around the mean as a result of following price action back and forth. So the reverse mean of log returns, which is a very fancy, amazing tool that our brain trust built and our testers developed and discovered all kinds of things, and we built it into an even more powerful tool, literally lets you see into the future. And what do I mean by that? I mean, it shows you the extremely accurate probability that the future reverse mean of log returns will follow a certain direction. Doesn't tell you the exact price it will go to. It shifts. That is its purpose, because the reverse mean of log returns does actually shift. But you can see with incredible precision that the direction of the reverse mean of log returns will be up or down based on the setting of it. So these are two different RMLRs with two different settings, and they show you which one of them is going to happen next. And here you can see a beautiful occurrence of when they diverge, and because I have different settings. So we can see also when they are correlated, or weakly correlated, or not correlated, right? And you can see when they are on both of them, correlated or weakly correlated or not correlated. And there's different settings for each of the inner first outside and second outside band. And here we see them diverging, and you can see that there's a divergent rate on them, right? Because the RMLRs are diverging, and the inner line in this case is our direction predictor in both of them, which is a different indicator baked into the RMLR, which literally shows you the probability of the next candle closing up or down. In this case, red, bright red is down, bright green is up, and when it's like this yellowish, light green yellowish, it's changing direction towards up, or from the ups towards the upside. Or if it was bright green and then it's yellowish, then it's like weakening a bit, effectively weakening or becoming less to the upside, do we say? And when it's bright green, again, it's to the upside. When it's bright red, it's to the downside. And the outside lines here are correlations. So when it's to the downside, negatively correlated, that means that there's going to be a very likely pump. And look at that, there is. And here, when it's bright green and bright green on the outside, or even gray on the outside, which is not significant correlation, but the CC, or the correlation coefficient direction, which is the first outside line here, is also green, you're likely to have a pump. And look at that, a pump. And you can do this candle by candle and look at each candle and see how the RMLRs work. There are other things about the RMLR which are also fascinating, which have to do with when it reaches an extreme band, what is its probability of closing down towards the RMLR and even towards the power mean. The answer is it's a very high probability, and that is a mean reversion. So, for example, here you can see on the 16th of January at 10 a.m. on the 30-minute candle, it practically touched the lower RMLR band there. It did touch the slightly higher one. It ran right through it. And you can see which one that is. That one is the 3012, I believe. Yes. Let's see. Yeah, that's the 1110, right? So the 1110, it practically touched. It ran through the 3012. These are RMLR bands. These are standard deviation bands of the RMLR. And I'm only showing you the third one. You can show the first and second as well. Once it did that, once it stopped touching these RMLR bands to the extreme outside, a mean reversion was in effect. And look at that. It mean reverted to the power mean. It even crossed the RMLR here before reverting to the power mean, and at the same time touched the other RMLR as it did that before it even closed to that power mean, completing the mean reversion. And then it traveled along. It got to around the second standard deviation band here. I don't have to put it up to know that that is the second standard deviation of this outer RMLR band. And it went down again and reverted to the RMLRs, right? Because if it's going to go to an extreme of an RMLR, it will revert to the RMLR. There just happens to also be a very high probability of it reverting to the power mean. And look how close it got here to that third standard deviation band. But here's an interesting thing. When it gets all the way through a third standard deviation band, there's a very highly likelihood that it will actually complete a mean reversion to the power mean before it hits again on the third band. Now, of course, it can hit several times in a row. It can even skip one or two candles and then hit it again. In some extreme cases, it will hit again and then not hit for many times, then hit again. For example, in the run-up last week, when Bitcoin was running to the upside on the 4-hour chart, you had several cases. Let's look at a chart like that. Oh, yes, I'll show you the 4-hour. The 4-hour, perfect example right here. You had an extreme outlier crushing through the third RMLR band, actually tapping this one, and not reverting fully. Came real close, but didn't revert fully to the power mean. And it just kept running up instead of reverting to the power mean. And it was crushing. It did run. It crushed it here, barely tapped it there. At this point, from here, it should have been in a mean reversion, right? And it was, but it pumped, crushed it again with a spike there, and then it tried again and went to the upside and crushed it again on that last pump. And since then, it is in mean reversion, having done this pump. And you can say, well, hang on, I thought you said there was a very high probability of it mean reverting. Yes, and I also said that there's a probability of some candles in between not, not tapping, and then before it hits again. Once it stops hitting that, then it is likely in mean reversion. The mean right now on the 4 hour is at around 20,800. So there is a very high likelihood that somewhere between 20,800 and where the price action is currently around 21.2, this might have some more sideways walking, or it might just stab down. You'll see a mean reversion completion, and this is a mean reversion going up and to the side, right? So this is a sideways mean AVQ of the daily, and you can also see on the daily chart here of our daily projections. These are all again projection tools that we built. These are our projection bosses. And you can see that the price action right now is sitting at the 99.99 percentile of this projection boss that started on January 8th. So last week's pump. And basically this is the fourth band. 1, 2, 3, 4. The fourth band here, the fourth arc of this Laplace distribution arc with drift on. And you notice that the drift is pointing slightly down. This price action currently, right, which has shot past the 99.9999 percentile for 1, 2, 3, 4 days in a row, is now sitting at that arc right at the 99.99, which is also the first, just below the first Laplace distribution of the Laplace bands right here, which are the plus symbols on this candle right here. You can see the little plus symbols, the blue and yellow ones. The pink dots here and the pink dots below, and the blue dots below, those are the normal distribution point. Sorry, the pink dots above, and the blue dots. Excuse me. The light blue dots above and the pink dots below are the normal distributions on the 18 normal bands, and those are our distribution bands that you can use. And here you have a projection boss looking forward. This is a PB1 indicator, and from the current candle, it's looking forward again with the drift on, and it's looking a little bit down at the moment. And this one is on Laplace distribution. If I were to change it to normal distribution, you would see it would expand a bit because obviously Laplace is a tighter distribution model. There's the normal band. If I do that of it, you can see it's tighter. But I like to put it on Laplace in this case because in the past couple of years, Laplace distribution has become a lot more effective in trading, I think, especially for intraday traders, although also for higher time frame traders. It's been that way since about end of 2019 or early 2020, pretty much. Most people still don't use these tools, obviously, because these are tools that pretty much go above a lot of people's heads. But if you know anything about trading this kind of stuff, and let's say you used to work in an HFT firm and now you find yourself in the retail space, here you can have access to similar maths in different presentation of the tools maybe, but they are the same maths, and they are presented in a way for you as a retail trader on TradingView to be able to make trades using actual relevant maths and not stuff that isn't really relevant, which unfortunately too many people use. So here we go. Here we go. This right here is a 15-minute again. And we got all kinds of other wonderful tools here. I'm not going to get into every single tool. We do have quite a lot of them, but I just wanted to keep this short all in all and give you a quick daily analysis to show you that today's daily range, the central volatility range on the VRE, that's the volatility range estimator of Bitcoin, is very tight. It's at 0.3%. What does that mean? That means that there is a high likelihood that we will have a trending day. The probability will be for a trending day with trending moves. And so far, we've seen random walks on the 15-minute or less, but we will certainly see and have seen already trending moves. For example, here on the 5-minute, you can see a couple of small trending moves. There's one right now happening. The size and scope of the trending moves obviously differs based on all kinds of other ingredients, but you can see very clearly on the entropy indicators, we are in a trending move on the 5-minute. And if we go down to the 3-minute, you'll see we are in a trending move that is building up. And yep, it's definitely in go mode to the upside with variance positively correlated rising to the upside. And on the 1-minute, for those of you who like to scalp the 1-minute, we are definitely in a trending move, but that trending move has already peaked and is potentially getting weaker with weakening positive correlation here, meaning the buy pressure is decreasing and the sell pressure is increasing. And look at that, the candle is turning pink, meaning to the downside in the case on my chart. Now, of course, this can shift around as it is trying to do, and you can see the trending move continue, especially if the higher time frames play it out. And you can see this rise continue further, but for the moment, it looks to be weakening correlation. And therefore, for now, price action may dip as it did on the last candle. So that was a good TP area from this rising point right here as it started to walk away from complete randomness and head towards a trending move. It still stayed in randomness for a few candles, but eventually got its little trending mojo on for a good few minutes. And if you have the right size and position, obviously a move from 21,273 to 21,304, $29, $27 move or something. It's not a lot of a move, obviously, but if you have the right position and speed and info, then it doesn't really matter if you know how to enter at the right time and take profits. Remember, the key to trading, no matter what you're trading, is to take your profits early and often, limit your losses, and don't be emotionally attached to your trade, right? Don't. If you are emotionally attached to an asset, you probably shouldn't be trading it. If you want to invest it and hold on for dear life, but that's not trading. So here you can see them on our AVR, which are basically a combined version of the AVP plus the ATPC. What is the AVP? It's the alpha volatility percentile and the alpha trading Pearson correlation. And this right here shows you the volatility, and this line here is the correlation with, again, the direction and the correlation coefficient significance on the outside lines. And here you see the flashes, and this is on the daily time frame again. So it's the same time frame we saw before. And you see the variance. Also here before, you have like an info panel that shows you. Yep, look at that. Down, no trade, no trade. What did I say before? It would be a very likely flat day with some possible pumpiness and maybe some down, but some possible pumpiness. And there we go. Look at that. Getting similar info from the info panel than we are from these. The reason that these are giving you slightly different information is because I purposefully set these to have different settings on my particular screen. You can set them to match, or you can set them to be different. I like to set them to be a little bit different to get different information. And again, we have here the alpha laser returns. Here you have the DLP and another tool here, the lambda. And over here, we got the variance in a different format than we do on the Wolfsbane that I showed you earlier. The variance, again, is showing you the variance is dropping with negative correlation, but the negative correlation is not significant. All the same, this is a tendency for price action to rise. What is price action doing on the day? Oh, look, it's rising, just like the variance indicates. Because that is, again, volatility. When volatility is falling and the correlation of it is falling, price action tends to rise. Same thing with variance. There's no difference. By the way, the same thing with entropy. When entropy is rising and correlation is rising, price action tends to pump. When entropy is falling and correlation is falling, price action tends to pump. When entropy is rising and correlation is falling, price action tends to fall, etc., etc. There's about 6 different tendencies you need to learn to trade this way. We make a chart of that freely available. It's really simple. It's not even a chart, it's just a sheet. We call it the volatility and entropy cheat sheet. You can get that again for free right from our Discord, totally free. And here, for those of you who like implied volatility, we even have an implied volatility tool right here, which is incredibly powerful. And that is one of the tools we have available, or soon will be available, I think, if it's not already, that our developers built for the community, especially for people who like to trade options and who want to have this kind of information available to them. There's all kinds of powerful tools here. I'm not going to go through every single one. We have dozens and dozens of them. I gave you a quick rundown of today's likely moves in terms of trending move versus random walk. We are lucky to see trending moves on the day, especially in the run up to traditional market open and in the time shortly after the market open. And then again throughout the day, probably some towards the end of the day as well on the traditional market. And that's because there is a lot of correlation, generally speaking, between Bitcoin and traditional market assets, and obviously opposite effects between, very often the opposite will happen on Dixie than happens on risk on assets. We see that all the time. That should not be a surprise to anyone trading different assets. You can see right here on the, let's put it on the daily just so you can see it. It's quite clear. And put these things away. Here we go. These are traditional assets. I guess I can make one of them Bitcoin just so you can see it. Let's put rice instead of rice. Let's look at Bitcoin here. I like rice though. Rice is a wonderful asset because rice is very important. It's like wheat, right? It's a very important asset. Anyway, you can see here very clearly that when the dollar is going down, like it has in this sense, you'll see, for example, in October, Bitcoin is going up as the dollar was going down. And then the dollar had a bit of a rise in November when Bitcoin and a lot of risk on assets were falling, following the whole Sam Bankman Fried FTX thing and all that. And in the recent days, as the dollar has been shifting down, Bitcoin and other assets like even gold, but Bitcoin and SPY, etc., have had a nice little pump. And a lot of risk on assets, or specific ones like stocks like Amazon or Tesla, etc., have also seen a rise, right, when the dollar is falling. Of course, sometimes they are not opposite, right? Sometimes they go in the same direction, but there is just a tendency for them to do that, to act the opposite way that the dollar. And that's obviously because if you're trading an asset against the dollar as its pair, then it's obviously likely that that asset will generally rise when the dollar is falling, and that generally fall when the dollar is rising. But it doesn't take a rocket scientist to figure that one out. Anyway, just wanted to show that to you guys. I hope this information has been somewhat interesting and that you got something from it. If you're interested in what we do, check out our Discord. I don't know if there's a link anywhere on TradingView for it, but you can find our Discord if you look for Alpha Trading if I look for our YouTube videos, or if you just come to our, what is it? It's alphatradinghq.com/discord. There you go. You go to that link, alphatradinghq.com/discord. That'll take you right into our Discord. It is, again, free to join, and you can learn all this information that we give you. We'll teach that to you for free. You can subscribe to all these advanced tools at a small premium rate. It's incredibly cheap. It's like $99 a month or something. And it's just like a cover charge. And you can get all these tools totally free, the ones on this chart. So this is what you actually should do first, because you can learn the fundamentals of trading, these tendencies, or the probability and the statistics with the volatility. Once you've done that and you see that these tools work great, you can get these other more advanced tools and get even better information to front run with and to take a lot of profits. And that is the idea of trading, right? So yeah, don't miss out. It's 2023. We've been doing this for years already. Hope you join us this year. Hope you make the most of this year in your trading. May you have many happy gains. And yeah, thanks for tuning in. We will hopefully be back soon maybe tomorrow. Looks like we'll probably do this daily. And on that note, I hope you guys all have a wonderful, happy day, and may the trades be with you always. Cheers.